Tax SOPs. All raw material parts used in the manufacture of ships or vessels will be exempt from customs and central excise duties. Following this announcement, stocks of companies like ABG Shipyard, SR Shipping and G Shipping rallied today. But let's get back to the controversy around the CBDT's roadmap to phase out exemptions. Joining us now to talk about this is Ketan Dalal, Senior Tax Partner at PwC India. Mr. Dalal, appreciate you joining us. Well, the news that's just coming in is that the CBDT has now decided to extend the time period for consultation to the 31st of December. And as I said, the government clearly on CNBC TV 18 saying that they're willing to address the pain points specifically on the R&D tax breaks. What do you make of those comments, and do you believe that this is a genuine, legitimate demand that industry has?
A couple of points, Shireen. First of all, the BJP manifesto of 2014 listed out 5 points of issues on which they would look at tax, and one of them was incentivizing R&D. So that is one aspect, and given the situation in variety of industries where we need to come up the curve, and the show earlier has been talking about auto and pharma, so and also in things like say aerospace and defense, I think this is one sector that does need incentivization because if you link it up with, let's say, things like Make in India, I think it does make sense. And well, let's hope that the government does relook at this dimension, because R&D is extremely important from an India standpoint.
All right, you're saying that a rethink is necessary at this point in time, specifically on the exemptions for R&D. But Mr. Dalal, if I could ask you to articulate for us, what is the global standard as far as exemptions related to R&D are concerned? What, for instance, would be comparable, in emerging market economies as well as developed economies like the US and UK? I understand in economies like the UK, there are specific patent box reliefs that are provided to companies as well. If we were to take note of what is being done outside of India, what could those parallels be?
Shireen, the issues on R&D treatment globally is very varied. In some countries, for example, there are some patent regimes. In some companies, there are weighted deductions or what they call enhanced allowances, accelerated depreciation, etc. So if I were to divide it between developed and developing economies, talking first of the developed ones, US, for example, has a tax credit equal to 20% of annual increase in R&D expenditure, which essentially means that they are incentivizing greater and greater spend on R&D, and they are saying, look, if you do that, we're willing to give you 20% of the differential. UK, as you mentioned, has a large number of fiscal incentives. Insofar as developing economies concerned, China has a weighted deduction of 150% for R&D expenses and a reduced, which is 15% corporate tax rate, which applies for, say, high technology and new technology enterprises. Korea, on the other hand, doesn't have a weighted deduction, but it has a between 3 to 10% tax credit provision with the more tilt towards SMEs. So, as I said, it's quite varied, and it's sort of no one kind of thing which is across the world, no.
Okay. My final question to you, sir, if indeed there is a review or a rethink as far as what the government has proposed, what is it that you would think would be fair, keeping in view the industry's perspective, as well as keeping in view the government's ultimate objective to bring the corporate tax rate lower and simplify the tax rate regime and do away with exemptions?
I think it's, sort of difficult to give one particular thing, but I think there is a weighted deduction of 200% on in-house R&D for approved programs. And if the programs are approved, obviously there is a check and balance there. And perhaps, and one doesn't need to necessarily go by the same percentage of 200. Maybe it could be 150 because the government does want to phase it out. Maybe it could be a phased out thing. So let's say 200% for for 17 and 18, then 150 and 133, just like they are doing on the tax rate. So perhaps there is a case for balancing out the phasing out of the rates, and if at all phasing out of the R&D exemption, even assuming that they want to phase it out completely, although whether it should be phased out itself is a question. But if they want to do, at least do it in a phased manner. That could be one possibility.
All right, Mr. Dalal, we'll have to leave it there. Appreciate you joining us here on CNBC TV 18 and taking us through what could be the middle path that the government could arrive at if there is indeed a rethink on doing away with exemptions for R&D. Now, Sunil Bharti